All right, so let's just take a look at NQ. So this is the 4 hour chart, and as you can see, we came down here. We tapped into the monthly fair value gap, which I think a lot of traders wanted to see happen, and kind of as anticipated, we've just been seeing violent moves to the upside ever since. Like even as we're speaking right now, the index is up almost 2.5%. It's just crazy every day. So we've seen this happen before, and it does require some adaptability. And I'm happy to see myself. I'm just a lot quicker to change my style slightly when we do move into these conditions. I'll talk more on that now. So as you can see, so say just take this New York AM session. This is on the 1 minute chart. If we go to the 5 minute chart, there's very like the read. So when we're moving with just such heavy momentum out of the gates, there's very little. The pullbacks that do come, like if you're waiting for this fair value gap to get hit, it just ain't gonna happen. It's a breakaway gap. Any of the retracements we get are extremely shallow and get bought up quite quickly. And typically, what I'm looking for is a 3 candle 5 minute BPR inversion, which you're just not going to get because price isn't stalling on the retraces. It's not building structure and then building a base for the next leg up. That's not happening. On the 5 minute, that's not happening. So if I go back to, again, like look at this. It's just bang, right out the gate. There's no 3 candles. There's one 5 minute candle down, bang, and gone again. Like it's like on this rally. So how do you adapt for that? You just have to. I'm just taking my strategy with the 5 minute and then going to the 1 minute. So what do I mean by that? As you can see here, we have this violent move up, and really this is what this is just like perfection. So right here, we're coming into, this is 9:57, 9:58 close. So at this point in time, I'm waiting for the 10 a.m. news to see, okay, are we going to roll over on poor news, and maybe I'll get a long entry down here, or is it going to be is it going to continue to produce what we've been seeing repeatedly, which is retrace, inversion, continuation with speed and momentum, and that's exactly what we got. So here's the trade I took. So really what I was looking for is this 1 minute fair value gap to get violated, but there's something else I do here just to be on the safer side. So right here, this is all already looking promising, and now we're after, so the news has dropped. We didn't get much of a reaction to it. Is this candle good enough for me to take? No, not at all. This could, because right now this is a 10:03, so we're still within the 5 minute candle, and this could easily just be a 5 minute candle wicking up to take this liquidity and then dumping. Whereas this is the 10:04 candle, and then this candle, oh, we're not here, where are we? So this candle here, there's the candle you take the trade on, because we're after closing the 5 minute above structure, inverting this, stop below the fair value gap that the candle that created this fair value gap. And where's my target? My target is, if we look at the 4 hour, I had this marked in this morning, we have this 4 hour fair value gap here, which I wanted to see get tapped into. And as you can see here, it was actually kind of a torturous trade. At this point here, I brought my stop to break even. I don't know what. So my stop was to break even, and eventually we got there. There you go. And we're continuing on up. ES has just been out of control. Let's take a look at ES. So we have an SMT here. Yes, it's been nuts. So we came down. This is that monthly gap. As you can see, higher low here, and that divergence is really playing out. So you have one, two, three, four daily candles. We've already taken all-time highs here, and right now, you do not want to short anything. Do not short. Trust me. I've made that mistake before. Is there going to be retraces? Yes. Is there, like, of course there is. But we're moving into a regime much more similar to what we have here. And look at here, look at the daily time frame here. One or two shallow retraces, large expansion. Shallow retrace, large expansion. Shallow retrace, large expansion, expansion. Like, you don't want to be on the other side of this momentum. It's just not worth it. And we're also getting to a place now that when you do see those retraces, and we have so much volatility to the upside, let your trade, if you typically take a 1 to 1 or 1 to 1.5, try going for 2.5. You have the volatility on your side now. Market conditions always aren't like this. If you look, especially, and even though it is slightly lagging, we have beautiful draws. Look at all these resting highs. Look at all this more resting highs, all-time highs. This is absolutely beautiful. So yeah, just wait, be patient. There will be some consolidation. There will be retraces. Just wait for that price to retrace. Keep an eye on the higher time frame for the key levels. But it looks like if we can close over this here, over this structure here, that is absolutely massive. Then you can kind of confidently say lower low, and that will really mark a higher low, and you can have real confidence that any pullback here is going to be bought up and then shoot for all of this liquidity. So we're entering a really beautiful period of price action, which isn't surprising because that's like we went through these tough months, came down, got this liquidity. Now we're finally seeing the expansion, which is rare. It's like, I guess it is August, so like enjoy, like make hay when the sun shines, sort of stuff. We are coming into this 50 simple, so I would expect a decent pullback at some point. Like I thought that yesterday, and this is just absolutely relentless. And if we have macro tailwinds, like earnings just keep beating. So you have the one side, you got the earnings just keep beating on all the AI, pretty much across the board on AI, and then you also have, well, we'll see the Iran war. They're talking about that being over. Like if oil's anything to go by, it looks like there's some truth to it. As you can see here, this is when we were ranging in the hundreds, came back down to fill this gap in the 60s, back up. So this could be a lower high. And where are we aiming for next on a macro? It's easier on the weekly. On macro structure, you're going to be aiming for these lows, which means $50 oil. What's going to happen with $50 oil? Everyone in the economy benefits, and all those companies whose earnings did well this time, now they've got the tailwind of cheap energy and increased profits. What does it do to inflation? It makes inflation come down, and the Fed can drop rates. So, as you said, there is kind of a macro snowball going on in the background here that could, like, even though markets are at all-time highs, they could go way higher. And that's typically when you go into a parabolic bull market, like we saw it in 09 with the dot-com boom and all that sort of stuff. What was it? Was it 09 or 99? Sorry. Where the Nasdaq doubled, I think, in a year or 18 months, like doubled. The whole index doubled. And that's typically what happens in super strong bull markets. It goes places you can't even imagine. As you're sitting here right now looking at this stuff, you're like, there's no way that could happen again. Of course it could. It definitely could. Like, this AI trade is no joke. So yeah, things are looking up. Should be hopefully a cleaner August after such brutal price action in June and July. So yeah, good times ahead.